When we look at a 401k plan, current year 2024, the deferral is up to $23,000. You can add on $7,500 if you're 50 or older. Again, as a business owner, your matching, your profit share part can get up to another $46,000 into the plan, and that's without even adding on the cash balance or the more advanced defined benefit type plan. With that, we can back into certain compensation dollar amounts for both the business owner and potentially spouse to maximize the deferral and matching contribution while minimizing payroll taxes. Also for children, this comes up quite a bit. One of the caveats here with IRS is that the spouse and child being on payroll is fine as long as they're being paid a reasonable rate for what they are doing for the business. That being said, there's a lot of opportunities here to maximize contributions to qualified plans for both spouse and child. So, for example, with a spouse that's performing services with the company, we have an example here where you have a spouse that you can pay the spouse $23,000 in salary to have husband or wife defer that full $23,000 into the 401k plan. Essentially, zero taxable income for that spouse. The business owner is getting a deduction for the $23,000 of compensation and half of the payroll taxes on that. So at a 37% rate, that's a tax savings of a little over $9,000 while putting $23,000 into your spouse's plan. Again, a great benefit, not only for retirement, but also for tax planning. Now with children, there is a special rule where a sole practitioner business, Schedule C, or a partnership where it's a husband and wife as the only partners, they can actually pay their children who are under the age of 18 without incurring any payroll taxes, which is unique. And with that, they can also pay that child up to the standard deduction, which is this year will be $14,600 without incurring any federal income tax. So, essentially you're paying this child $14,600, no federal income tax, no payroll taxes, and you as the business owner are getting that tax deduction on your Schedule C or your partnership tax return. Again, other things can be added onto this. If you have let's say a simple type IRA plan, you could have that child defer money into that plan. So you could reasonably have a child making $30,000 in W-2 salary, deferring $16,000 of that into a simple plan, leaving them with $14,000 of taxable wages on a W-2. All that would be, sheltered by the standard deduction, leaving zero income tax and zero payroll taxes, while the business owner gets a $30,000 tax deduction on their business.
That's fantastic. I think, Brian, there's so many takeaways in that. I think this is probably one of the biggest areas of opportunity for clients. I think about some of the work that Drew and I do with clients and just understanding that they may be drawing, let's say, $500,000 of income out of their business. They're married, and yet their spouse isn't on payroll. And so there's an opportunity where they could effectively, for a legitimate reason, find a role for that spouse to play in the business, put them on payroll up to the amount that they could defer to a 401k, and find another, call it $23,000 deduction, minus what they would have paid in payroll tax for that W-2. In addition to that, of course, there's the matching, the profit sharing piece. But that's a huge opportunity for, I think, a lot of folks that are watching this, which is, hey, do I have a spouse that I could legitimately pay through the business, and ultimately find another $25,000 or $23,000, of deduction, which I'm already paying to myself. So it's just going to another tax ID number. And then also paying my kids. So right then and there, I've got 3 children as an example. So if I'm paying my spouse and my children, I could effectively find almost 42,000 of deduction for paying my children, plus another 23,000 of deduction for paying my spouse. So there's 70-ish thousand of total deduction just right then and there, just through the proper compensation planning